we also take a look at expenses. We have admin expenses or general expenses. So we say admin expenses or general expenses. And this also, it has working. And therefore, in order to denote that working, you now write note 4. So whenever users of accounting information come across admin expenses and note 4, they will take a look at, they will go through the note 4 and see how we arrive at the figure for admin expenses. So we also go to the next thing we should think about after administrative expenses. In the company, we think about what? Selling or distribution expenses. We say selling or distribution. Distribution. And this also, it denotes working 5. Now, these expenses gonna be subtracted with less. Mind you, this is a highly summarized financial statement for publication. Now, the workings have to be treated as notes to financial statement. So that is why you identify them here with note 1, note 2, note 3. You need not to put them all into this financial statement. Now, if you do, the financial statement will be, how can I say, will be awkward in terms of presentation. It will be choked up, So that is why, in order for it to be understood properly, you have to put note. You have to put note. So whenever an investor, supplier, go through your financial statement, now if someone wants to see how the selling or distribution, how we ascertain that particular figure, the workings, the person will go through the note here. Note 5, we take it, the person will look at the notes to financial statement. From there, he or she will see how we ascertain at the selling and distribution. And this is the legal way of presenting your statement of profit or loss. And if you go through the IAS 1, which is International Accounting Standard 1, tells you how financial statement, how an accountant should present financial statement. So now the admin expenses and the selling and distribution expenses has to be what? Deducted. Now we have to deduct both of those expenses. So now let's deduct. Let's deduct. Now we've deduct. Now we arrive at, now how can we call this? We call it as what? Operating profit. Operating profit. Operating profit. Or profit before interest and tax, Now, sometimes directors, for some companies, they give bonus to directors or finance superintendent whenever they arrive at an operating profit. For some companies or for some organizations, they give director bonus whenever the financial accountant or the finance superintendent arrive at operating profit. Now, what next? Now we've arrived at our operating profit. So now we also, because now we have profit before interest, So now we say interest expense, interest, INT, interest expense, or what? Financial charges, financial charges, interest expense or what? Financial charges, and it has working, so we put note 6, we less, we less. Now, after deducting our interest expense or financial charges, we now have net profits. We now have net profits, net profit before tax. We now have net profit before tax. Now, after the deduction of our interest expense or financial charges, we now have net profit before tax. And that reminds me, the International Accounting Standard 12, which is IAS 12, talk about income tax. In our next video too, we'll be talking about we'll talk about this IAS 12, the income tax, so that we properly have that understanding. So let's go directly. Just after net profit before tax, then we say what? Tax expense, tax expense. Now we deduct. We say tax expense. Now tax expense. Now, after the deduction, we now arrive at what's known as what? The net profit after tax. Profit after tax. Now, after the deduction of our tax expense, we now arrive at our profit after tax. And now we go to other comprehensive income. Now here ends the statement of profit or loss. Now some accountants, people need to understand this one. Now from the revenue to net profit after tax, now here ends the statement of profit or loss. Now we continue with other comprehensive income. Other comprehensive income. Other comprehensive income.